Hi, I'm Kevin Flanagan, Head of Fixed Income Strategy at Wisdom Tree.
And I'm Jeff Weniger, Head of Equity Strategy. And this is Minds on the Markets, where we go behind the scenes and beyond the trends to explore the forces impacting our markets. All right, we're back here in mid-October at this point, Kevin. And we got market ructions as we go to film this. Who knows what the conversation will end up evolving to, but the China tariffs back on, no, they're off. They're on, no, they're off. That continues. Also some issues over there in private credit. Make sure that if you want to, as we get into the fourth quarter here, and you want to see what Kevin and I have to think, especially if the market ends up taking a header or doing something a little bit wild, make sure that you are liking, subscribing, following, doing all that good jazz here on YouTube as we build the channel. Now, over here on the Minds of the Markets piece that we wrote this week, Kevin was opining on the concept of, and it's true, Kevin. I mean, I kind of do it. I say, well, the Fed's going to cut rates. What's it going to do? He's going to cut 25 basis points, going to pause. But maybe the balance sheet doesn't get as much attention as it should. Tell us what you're writing about.
Exactly. I mean, here we are. We're debating what the Fed's going to do in a couple of weeks at the next meeting. It appears, unless told otherwise, Fed's going to probably cut by another quarter point. But no one thinks about the balance sheet anymore. I remember when that used to be a big deal, that it used to get a lot of attention. And what's interesting is the Fed has now cut rates 125 basis points since last September. But in the meantime, since June of 2022, they've been embarking on quantitative tightening, reducing their balance sheet. So they are actually easing in one form of monetary policy, but theoretically, they're tightening in another, but that's not unusual. The Fed kind of said, yeah, we can do that. And here they are. They're doing it.
And you can change what your composition is of your balance sheet if you manipulate my quantity of treasuries, my quantity of MBS. The housing market needs more action, maybe needs less action. Tell us a little bit how you can do that inside the confines of that. What is it, 6 trillion? What is it, 6 trillion?
Yeah, I mean, that's a good point. So when they started this more than 2 years ago, the balance sheet had risen to about $8.5 trillion. I mean, just think about that, $8.5 trillion. That's double the size of what it was at the peak of the financial crisis and Great Recession. So here we are now. They've reduced it by a little bit over $2 trillion over the last couple of years. And you're right. But, the balance sheet is more than just what we're thinking of, but I don't want to go down that rabbit hole. So what we're talking about is holdings of treasuries, mortgage backs, specifically a little bit of federal agency securities. Yeah. So what they've been doing is, trying to get their balance sheet more treasury centric. That's where they want to ultimately get to. But when you're talking about $8.5 trillion, that's going to take a long time to get there. So, that's where, you're at the point. The Fed can manipulate their balance sheet any way they want. But right now, they're trying to let mortgage-backed securities roll off more than treasuries.
And what manipulation do you think we will have as we go into 2026? And also, can you tie that in essentially with what you're anticipating on the actual Fed funds policy rate, the thing that everybody's always talking about?
Yeah, what's interesting is that the Fed is not actively or outright selling anything on their balance sheet. What they're doing is they're buying less of what's maturing, right? That to put it quite simply, that's how you get these sort of more modest reductions. So, the thought process was, and I think I was in the camp as well, they probably would have ended QT sometime this year, but maybe now it's not until early 2026. And the reports are they'll still probably keep it somewhere at 6 trillion or so. So it's still going to be large no matter what, and bigger than what it was before COVID. In terms of Fed funds, looking at this, couple more moves, and then let's see. The government shutdown. We need data. Really? And so does the Fed. So I think, maybe you get another quarter point or two rate cuts and then take it from there.
Yeah, and look, with the government data, I mean, Kevin, you and I earlier this morning, we're Wisdom Tree ETF guys. We were basically trying to move our CPI call, right? Because we just don't have the CPI date. We think it's going to be October 24th. Maybe they'll move that again. So everybody's doing a little bit of playing this by ear. Make sure that you are subscribing, liking, following, doing all that good fun stuff as we go on into Halloween time, Kevin. And we'll do some more Fed criminology as the year develops and some more big, broad macro concepts here on the YouTube channel. Thank you, everyone.
Thanks.